Bill Rayman speaking. Here's we sort of spill the beans about mortgages, what you should know, what you need to know, about how to get a home, how to get a loan, and how to get through what has become an onerous system. This is not necessarily the banks doing. A lot of it has to do with the government regulations that came in after the fall of the market in 2007 and 8. Principally the Dodd-Frank, which regulates financial industries, puts a ton of pressure on banks to make sure they're giving what they call qualified mortgages. And the restrictions on that are well-intended, bordering on the inane, and makes it that much more difficult for you to qualify because they're looking for reasons to not do a loan. If you're sort of not necessarily swimming against the current, but you're looking for opportunities that other people will pass on, one of the things to consider is buying a home that needs work. It's not a teardown, not reducing the structure to one wall. It's just a home that, for whatever reason, doesn't qualify for a mortgage now. Now, the reason it won't qualify for a mortgage is because a bank will only lend on a home that has been certified, typically by the appraiser, that is habitable, that there are no health hazards. Health hazards includes anything from it's missing a toilet, there's an open hole in a wall, the flooring is coming up and somebody could trip over it. It doesn't take much to have them deny the loan. So many people shopping for homes can't even consider those because they will not get a loan. So unless you want to buy for all cash, you're not going to get that property. This to me is an opportunity. You can look at a home like that that needs some work, not a ton, because with guaranteed rate, we have several different programs that will allow you to purchase the home as is, and we will provide extra money after you close for you to hire your contractors, your roofer, your handyman, whoever you want, to do the specific work needed to make the home habitable and financeable. There's no other way of doing it. Imagine you found a $800,000 home. You don't have an issue putting 5, 10, 20% down. You've got good credit. You should be able to buy this property, but let's say it's missing a water heater, the plumbing is ratchety, and there's a hole in the roof. I can guarantee you there isn't a bank out there that will give you a loan to buy the house as is. They won't, because it's a health hazard. Anything goes wrong with it, you have the right to sue the bank. You're not going to get that loan. We have several programs that allow you to buy the home knowing that you're going to fix it after it's done. The way that procedure works, the gist of it is, prior to the home closing, you will hire whoever you want, a contractor, handyman, to give us an estimate of the work that's needed and approximately how much it will cost. This isn't for beautification, this isn't for landscaping. These are the things needed to make the home safe and habitable. So let's say this $800,000 home, it needs $30,000 worth of work to put in appliances, to fix the plumbing, to patch the hole in the roof. You will get approved for the loan, and you will be approved for a $30,000 construction renovation loan. You close on the home, it's yours. You will then have the opportunity to hire whatever contractors you want to do the work. The contractors send the bill to us, we manage the money, we will pay them. You're only going to have to borrow as much as is needed to do the repairs. We will then send someone back when it's finished to confirm that the house is safe and wonderful. The loan will be the purchase price less your down payment, plus however much of that $30,000 you needed to finish the home. At the end of the day, you've got a home with new fixtures, new appliances, and you've got a home that nobody else is really bidding for. So you're probably going to get it at a price that's lower than the market. In almost every instance, and I would say every, but I can't confirm because I haven't done the research, but in virtually every instance that I've done this, the client who got the home, by the time they put a couple $10,000 into it, that home is worth well in excess of what they paid for it, including the loan.